Gentlemen, thank you so much for setting the context for what's in store for the rest of the day. So, ladies and gentlemen, as we move on to our first main discussion this morning, we shall explore how businesses are navigating the ever-changing landscape. And in this session, we shall dive into the complex world of macroeconomics. Our first session is titled Dhanda in a Chaotic World, where we shall explore the global and local economic forces that are affecting our industry. Please join me in welcoming our expert to the stage, Shaleen Sinha, Head of Growth Tech India at Boston Consulting Group. A round of applause, please, for Shaleen Sinha. Could we have the presentation on the screen, please?
Morning, everyone. So it's an honor to be here once again, and thanks so much for the invite from the TiE membership. So when we started thinking about what exactly the scope of this discussion will be, I think the brief was, can we discuss what's happening on the overall macroeconomy, especially with US, what's happening in AI, what's happening in India, and can we cover in 30 minutes? To be honest, very challenging task, because right now, if I look at the first two fronts, almost a week is like a decade. I mean, I think the kind of pace we have seen on both the macroeconomic movement as also on the AI is just honestly unprecedented. But I'll still give it a shot, and let's see. So these are three trends I'll broadly talk about and try and do a quick summary of this. So let me start with the US. I mean, whether we like it or not, the reality is, so far it has been a single polar world. I mean, maybe you can call dual polar with China being there. And US does have a huge reverberation across the world economy. So before I just get into what we see so far in terms of action, I think all of you are fairly plugged on that. Just wanted to reflect on where US has been over the last 4 or 5 years and what it has been doing. And at least where we see this, it's in a fairly delicately poised setup. You look at the overall GDP growth, it has been stable around 3%. The inflation has been under control, not where Fed would want to be around 2.5%, but still at a good 3% and been stable there. The overall confidence levels are good. Unemployment is not on a very high level. So things pretty much in control. And that's what the left hand of the kind of chart talks about. But if you look at the things which have been ailing, and this is not something which is new, we have been hearing for decades now. The fiscal deficit levels remain extraordinarily high. The debt is 124%, which is one of the highest in the world. And the fact that there is a huge amount of consolidation on the stock market. So if you just look at stock market capitalization, it's 50% plus, on a good day, 50 to 55% of the overall global market. And that's interesting because US is 25, 28% of the global economy, and the stock market is almost double of that, right? So that means there is so much of concentration sitting there that anything which happens in the US will have a massive effect globally. So in this delicately poised economy, where things have to be done delicately, we have now a barrage of action. And on the left, you see just the number of executive orders which has come in 45 days. So 83 executive orders, and obviously not all of them are economy-related, but still a huge chunk are. And an average of the previous administration was 40 in the year. So that's the contrast in terms of how quickly things are moving on this front. And if I were to split and say, look, what are the big fronts where economically we see big changes happening? There's obviously tariff, and it's all over the front pages every day on ET, Mint, and so on, which will have implications fundamentally on supply, which will have implications on inflation. I'll come to it in a minute. Immigration, a huge movement, but the reality is US is a labor-starved economy. So if you want to do something in hospitality, you want to do something in manufacturing, there is that labor you need, and that immigration can have ripple effects on that particular effect. Deregulation, and in fact, the last 4 factors are actually reasons why people have been bullish on Trump. Deregulation, focus on AI, focus on robotics, automation, just trying to create a fund and a momentum. I think that's a huge one. Corporate and personal tax cuts is more about retention of where they are, but maintaining that means essentially a little bit more ease of business. And of course, fiscal deficit. I mean, nobody believes that they're going to cut 2 trillion, but even a 500 billion or a 300 billion is a fair amount of cut from where they are right now. And then finally, oil. I mean, One could have environmental concerns around it, but the reality is the hard economic truth is more oil in the economy means there's a better lubrication of it. So the first question is, what is the implication which you see globally? And we'll come to it in the US in a moment. So as I said, extremely connected. I mean, look at the global flows which are happening across. And typically, when we look at the global economy, I think these three dominate. US, Europe, China, almost 70% of the world economy sitting there. And of course, India and Japan, the next on the line. And the reality is that in each of them now, we're going to see a fair amount of disturbance. I mean, US right now, and you're seeing the headlines almost on a daily basis, there is a volatility which is there, which will have implications in terms of its economy, its inflation, so on and so forth, and I'll come to it. But even in Europe, it has been facing muted growth for a fair amount of time. And there are economies which are far more export-oriented, be it Germany, be it Central Europe, be it countries like Ireland. The reality is those tariffs, and if they escalate, will have an implication. Overlay the Ukraine war and the fact that EU has to spend more on its arms. So there is actually the first time Germany has taken off the limit on how much it's going to arm up. It means there is going to be a fair amount of stress on that overall economy, and that will see as a effect overall. China, we know, has been suffering. I mean, despite the rally in the market right now, structurally there are issues there. It is an economy right now which has overcapacity, and then on top of this, you have the export bans and you have tariffs. It will have a second-order effect. So net-net, I think overall, as we see it, next few months, weeks, I mean, given how things are, will be volatile. I mean, that's what at least we are anticipating across as we look at the global economy. And if you look at the effect, and the left-hand chart basically talks about, even before Trump came in, where do we see the new trade, FTAs, and so on coming in? Actually, if you look at the top biggest growths in terms of different routes, only 2 of them are actually from US. Bulk of them actually had China, not surprisingly. But the sheer size and growth of those are astounding. And then you look at how, over the last few weeks, realignment is happening. I mean, UK and EU FTAs have been in work for us in India for the longest time, and now suddenly you see a massive acceleration. EU and China, now they're talking about fundamentally potential realignment. I think over a period of time, if this continues, I mean, even if we don't have a full-blown tariff war, which hopefully we don't, we will see a potential realignment. I think this whole idea of one anchor, as we had, where US was really the consumer, and a lot of flows were happening there, I think potentially will change. And structurally, this could have a second-order effect across many, many geographies. What about US? I think it's extremely hazardous to actually have a guess right now and put a scenario. I mean, almost when you talk to all the economists, you will get very nuanced, a very different point of view. But what is very clear is that the uncertainty is unprecedented levels. If you look at the left-hand chart, it's talking about the consumer confidence right now in the stock market, and it has slipped. I mean, you saw yesterday what happened in the US market as well. And there are 2 scenarios, and it goes back to the 6 factors I talked about. If it's well structured, there's a cadence, you get the deregulation going, you have push to the economy going in, and you're able to manage the issues around tariff and immigration. Potentially, this could still come out good. But what's interesting is that even the most optimistic economists are, opinions right now on the left-hand good scenario is not saying that we will do much better than where we are. The scenario is more like, okay, in US we'll continue to where we are as against moving much forward. The right-hand scenario, where and there are multiple scenarios there to be honest, is where things actually start coming off. You actually start seeing supply shock coming in, inflation going up, interest rates going up, economy starts suffering, stock markets getting into a spin. Hopefully that doesn't happen either. I mean, the read right now we have is there will be a calibration when you start seeing impact and you come back more to the left-hand scenario than right, but I think net-net, the only summary I would have is we will see volatility. We will see a lot of these movements as they happen because from whatever we are seeing, he's fairly serious about tariff right now. I mean, it could be negotiating tactic, but honestly, no one really knows. And so therefore, what are the implications for India? And I see there broadly, I think, 3 buckets. One is obviously on the export and export and import, and we are seeing that potentially behind the corridors, behind the closed doors. These negotiations are happening, but we'll see some impact coming in. Hopefully, it's mitigated. There are sectors around like auto, there's sectors around steel, pharma. I think those are places where we'll get potentially some impact. IT with the visa restriction, we could get an impact. AI is another one which is on top of it, so there is a certain degree of risk which is sitting there. The point that we may have more Russian oil if the Ukraine thing gets sorted will have overall, give us a little bit more headroom on the fiscal side. And the China plus one angle, I mean, honestly, that has been portrayed for many years. India really has not been able to capitalize on it. Vietnam has done far more than India, for example. But it could still be a time for us to get our act together and capitalize on this. So net-net, I think on the trade side, view is there'll be some impact, but hopefully not too much. I think on the capital flow, and all of us have suffered over the last few weeks with this, I think the FPI volatility will be there. Talking to a lot of folks and analysts, it's very clear that right now, US is volatile. We don't know where the next emerging markets are. And in India, there is obviously an implication in terms of where we are priced and so on and so forth. So I think over the next few weeks, months, again, we will see that volatility. Having said that, if you go back to the Indian economy, and that's the right-hand side, we are still a domestic consumption and service economy at the heart of it. We are not an export manufacturing setup as China is, which essentially at this current time of volatility implies that we have that buffer. And if we get our macros right, if we kind of hunker down and get things right, I think we will be hopefully tiding over this much better than most of the world. So just a reflection, and this is something which we used last time as well, in terms of India, where we are. And I think it's interesting because sometimes we get lost in the daily momentum, daily news, what's happening in India. The reality, if you look at the last 15, 17 years, we have done amazingly well, right? I mean, we are 1.2 trillion economy in 2007. We are on 3.9 right now. We're 3 times larger, which means 2 more Indias have gotten absorbed. That's the size of opportunity which has opened up. So talking about the previous speakers when they talked about opportunity for startups, I think that's where a huge opportunity is open. And that's why we see in the last 2 decades so much momentum and activity. You look at FDI investments, I mean, it has been absolutely astounding in terms of how much we have aggregated over the last 15, 17 years. So I think still a very, very good market. We have done very well. And if we look forward, this will continue. Even if we take a more measured projection of 6.5%, the reality is the next 7 years, we will plonk one more India right here. So at this size, we'll get one more in. That's huge. That's huge. And so therefore, anybody who is actually being wavering in terms of what opportunity, I think India is still a very large opportunity. We still need to crack it. And so what does India mean? And I'll talk largely more of the consumer because India has multiple facets. Consumption story, we all know this. 3 Indias, the largest. I mean, there are 3 parts. If you look at the top, the very 2%, 5%, actually 10 million household, 50 million household, that's almost equivalent to a Europe in terms of, per capita income and how rich, that part of the economy is. Then, of course, there is a middle part which is equivalent to, let's say, Indonesia, and then, of course, we have the last, which is sub-Saharan Africa. And what we are seeing from the startup side is there is a clear, persistent effort in terms of going across all 3. The first one obviously has been the focus for most of the companies, but even in tier 2 and tier 3, we are seeing a fair amount of activity. So what I want to do in the next 5 minutes, given the brief, is just quickly talk about a few of the trends we are seeing on the startup side. It's not comprehensive by any stretch, but at least it's the big ones which we're seeing across. On the consumption, this is something which almost all of us are aware, the quick commerce. Honestly, we didn't see it coming. Last 3 years, it's been only a 3-year journey. It's a $7 billion kind of overall pie right now. And just to contrast, modern trade after 20, 25 years is 20 billion. Today, Flipkart and Amazon, after 15 years existence, are 45 billion. And we are seeing that consistently this model is scaling, where they have got a product market fit in high density and generally high capita micro markets, and they're getting the stores profitable. So while they're still burning a lot, the reality is this will continue, and there is a fair amount of headroom right now. Huge implication on the consumer brands, because so far, for example, in FMCG, the first thing you used to build was distribution. A lever's strength was distribution. That's what you build a pipe, you push things around it. That pipe is now getting exploded. You have now aggregators, and you can ride that. Over the last 3 years, close to 300 brands have been launched in D2C across spectrum. Obviously, there's a question about how do you create moat, what's the differentiation, what happens to FMCG majors themselves who are going to get squeezed in margins. But interesting time to be building something in the D2C space. Other one, India, multiple opportunities again. I mean, we know these companies, full stack companies, when people are asking for, certain degree of quality, certain degree of reliability. Now we have companies like Licious, Country Delight, and many others who have become full stack, fundamentally solving supply side issues which were there and getting that on and finding a scale. You're seeing experiential economy coming up. I mean, anybody who tried to get a Coldplay ticket recently knows about it. There is discretionary income and it's being spent at fairly high amounts. So travel, all of that experiential stuff, I think we're going to see a market explosion. And then there are multiple other niches. I mean, pets, wellness, et cetera, where again, we are seeing big markets being created and now companies coming to scale. So this is all a tier one India in some sense kind of playing out, and we're finding opportunities that startups are capitalizing on. Also interestingly, India now building for diaspora and even for the world. So some of the examples are pretty well known across fashion, across whiskeys. But even interestingly, companies like Ultrahuman, Pocket FM, these are designing products and actually going into US market and other Western markets and winning them at their own strength. That's a very, very interesting trend. I mean, so far, I think in one of the previous discussions was alluded to that now Indians and Indian companies are finding confidence in terms actually going and fighting the Western companies on their own turf. And that's something which I think we need to watch out for. Something we talked about in the earlier edition also. Indian companies have been hesitant doing that. But I think if I look at Israel, if I look at some of the other Nordic countries, big companies have come up there because the domestic market was not there. I think this is something which you need to watch out and see what comes out here. Tier 2, Tier 3, again, it's an opportunity. It's a tougher one. You have to get the unit economics right. But we are seeing now companies which are getting there and cracking the monetization model, be it in terms of microtransactions, be it in terms of creating low-cost product and therefore finding a subscription package which is cheaper, be it in terms of actually finding new models, in terms, especially in fintech, in terms of how do you enable credit. I think we are finding people who are getting there and scaling up. And that's very interesting because earlier, for example, you would talk about a Misho for the longest time as being one scaled opportunity. Now we are seeing companies which are coming up the scale. And I think over the next 3-4 years, we'll start seeing large companies being built here. Also, interestingly, India, while we talked about 1, 2, it's a very heterogeneous market, and you can find niches. I mean, what we saw in Mahakumbh this time, it was not a tier 1, tier 2 story. It was a heterogeneous story across stratas, which tells you that there is spaces for us to find. If you look at the overall Indic umbrella, if you will, yoga, Ayurveda, spirituality, I think there's a space. And we're seeing companies coming up there, but I think we can do more. I mean, look at meditation apps like Calm and Headspace, both of them unicorns, been born in West. Potentially, why not us? I think that's our heritage, and I think building something there will be very interesting. You look at something like Gen Z, we talk about it, we did a recent study, almost 50% of consumption in next 10 years will be all Gen Z. Even today, right now, 25-30% of decisions today are being influenced or directly been done by Gen Z. And they buy differently, they behave differently, and now we're seeing startups coming up there, right from how they date, how they go out and shop, where do they consume food, different models altogether in terms of how you look at this market. So what it tells you, and there are multiple niches, that India in itself, going back to the large market, will find different segments where you can create interesting startups, right? And you can actually find scale. Fintech, just I'll put one side, it's a huge market, but it has carried the weight of just being, oh, it's a lending business. It is, of course, a lending business. We have a large lending market. We're still under-penetrated on retail and SME side. But if you look at many other slivers, it's opening up. Payment, I mean, there's a zero MDR issue, but the reality is there are also other opportunities, right? From, for example, cross-border transaction. It's a $1.8 trillion market, which is inefficient. Your wealth tech, we saw as the bull market came up, we saw penetration. Over the last few weeks, months, we have seen some stress, but it's still under-penetrated by a huge imagination. InsurTech, both LI and non-LI, massively under-penetrated against the global averages. So again, an opportunity for almost all the InsurTech and distribution players. And finally, I think on the AI and SaaS, I'll talk a little bit more. But here, I think even just reimagining the banking stack and looking at different set of point solutions or stack solutions, I think there's a huge opportunity and startups are coming up. So again, a massive opportunity. We have seen some amount of stress in this market. But if you look at the Series A funding and companies coming up, I think we are seeing a fair bit. Finally, the B2B side, again, a huge opportunity going back to India market. Many of these interfaces are broken, right? If you look at agriculture, if you look at within sustainability, you look at construction, and that's on the right-hand side. You're seeing large companies being built as largely marketplaces or going even backward integrating and figuring out how to get the supply right. What we saw in consumer side, where the supply side stack was broken and companies build the full stack, we are seeing now in B2B. And again, we will see more of these opportunities coming up as we go forward. Finally, AI. I mean, this is one section we could not have done beyond. I think every time I come and speak on AI, I feel like, is there a hyperbole? Is there a little bit too much of hype? But then it catches up. I mean, 2 years ago, we talked about ChatGPT and its massive influx in. Now we are talking about agentic AI. And over the last 6, 8 months, the amount of excitement I've seen, the amount of traction I've seen, especially on the supply side, is humongous. Just to kind of clarify what generative AI and AI, the distinction is generative AI is where you used to create something. It would be a word, it would be a code. On the right-hand side, the agentic side, now we are talking about fundamentally AI getting into workflow fully and being able to run them. And that's a massive shift, both from a reasoning model point of view as also underlying technology in terms of just how we get the AI to work for us. And these are a few examples. I won't go through them, but fundamentally, the left-hand side talks about what we could do in generative AI world, and agentic AI, while not fully formed, what it can do. And hopefully within the next few months and quarters, we'll start doing this. So simple things like, I could get a dashboard, but now my agent could actually move inventory. I could get a customer care first response, or agent could actually anticipate and solve it. I could anticipate a cybersecurity attack and create a dashboard around it to somebody anticipating and moving things around. The overall potential of what AI can do is actually humongous. And this one, does seem like, obviously there's a hype, but there is a fair degree of reality and truth in this. So what is the overall opportunity? And I think our anticipation and sense when you do the maths around it is at least $1 trillion plus. And this is more based, so let me explain the maths here. There are 4 layers we talk about. The lowest layer is the hardware, and then you have the compute, the cloud, and then you have the compute, and then you have finally the application layer. And just taking the investments on the bottom layer and putting some numbers in terms of what the gross margin expectation of every layer would be, you could come up to almost $1 trillion. Huge number. Why? This is where the left-hand chart in the extreme left talks about where the current size of the overall software world is. It's $1 trillion right now. We anticipate in the next 2, 3, 4 years, a more $1 trillion will get added. That's massive. So the question is, does it pass the sniff test? And if you go and check with investors and you go and see the logic, the essential point is the TAM explodes. So one of the podcasts I was listening to, they said, Salesforce, which is one of the largest CRM players, is 30 billion, give or take, in a $120 billion market. The total sales and marketing budget, which is the personal budget, is 1 trillion plus. Now, there are second-order implications. We'll talk about that in terms of what it means for the human labor. But today, if you look at the vertical AI companies specifically, the TAM has exploded because you're not talking about a software spends only. You're talking about software plus human, and therefore, potentially much larger pie to take. And this is one of the examples it talks about how a 120K software developer and how much of a software SaaS company would take, which is 15%. But here you have 100% pipe, and that basically makes a huge market. But the reality is, if I look at enterprises, and this is something at BCG we work a lot with, they're being extremely cautious. So while you have a lot of news and a lot of hype around what's happening on the left-hand side, this is what the charts tell you what the enterprises, and these are all US, almost 600, 700 companies, which we polled. Most of them right now are saying we are okay with Copilot. We are not ready yet to go into an agentic world. And so there are some use cases which are low stress. You tell me what internal uses, where I don't necessarily need to have very high degree of accuracy and so on and so forth. I'm willing to do that. But anything which is market-facing, where potentially I have a liability issue as well, I want to be 100% sure that it's enterprise-grade, highly reliable. But our anticipation is, as the models develop, some of this will start changing very quickly. Even within 2 years, we'll start seeing the movement happening towards the right, where we start seeing bigger applications coming in and more assured applications coming in. And which is what is reflected in terms of how they are talking about, which startups or which companies they want to work with. And I would want to focus on the right-hand chart here, which basically talks about who they are working with. So clearly, right now we are seeing a fair degree of work happening internally, and then there's an incumbent advantage. So the advantage to a Google and Amazon, the cloud providers who are well entrenched, I think there is an advantage there for them to go in and tell them, look, we have the goods, can we just go in? But interestingly, second after that, they are open to working with AI companies or AI-first companies and startups, which is kind of unprecedented. If you look at SaaS evolution, the amount of time it took for them to get ready to work with startups was huge. Right now, they understand, the CIOs understand that, look, there are pockets of goods which are sitting with startups, and we should be open to working with them. And that's a massive thing. And therefore, anybody who's thinking about building an AI startup, I think it's a very positive news. But the reality is there is a big challenge. If I look at the overall opportunity, and this is the more generative AI world, we did a poll of almost, I think 800 odd companies. 75% of them are not realizing value yet. 25% have, which means that there have been a lot of POCs, but necessarily things have not turned out well. And I think, to me, if I look at the big factors which have happened there, one is that supply side has not matured. A lot of these companies have done things themselves, or they're outsourced partners. The solutions have been clunky. The supply side has not matured, as we talked about. And then finally, as AI is moving very quickly, now we have new issues of multi-agents, orchestration platform, which again are not sorted. So the supply side, in some sense, has to shape this and try and get to breaking this bridge and finding more value for the enterprises. And I think that's what the companies are doing. This is just a small snapshot of what AI companies we are seeing, and most of them have emerged over the last 1.5 years. So there are incumbents sitting there, but there are also many new startups. Almost in Valley, if you go and spend 2 weeks, you will see almost 5, 10 companies which have come up very quickly and have scaled up to a decent ARR. I mean, $1 million ARR used to be a big thing. Now we're talking about companies getting to that in few months. So companies were horizontals, which are the low-code, no-code platforms, which was the flavor of season last year, to now finding very clean applications, which are both on the functional side. Customer service is big, software development is big. Now we are finding more functional applications, as also the vertical side, both in financial services, retail, healthcare, pharma. We are signing new companies coming up globally as well as in India. And interestingly, also in India. I think this pace will continue because I think unlike SaaS, where a legacy tech was a big issue, you had to take something out to bring something in, and that took decades. Here, the reality is the AI application sitting alongside or on top of the current applications. So if you have a system of record like a ServiceNow or a Salesforce, you could actually plug in a new AI app without replacing anything, which means the pace of adoption will be faster. So finally, what does it mean for Indian startups? I think it's a great opportunity. I mean, you talked about size and scope, but it's also extremely competitive, as you saw from the supply side. It's not like the US company is sitting. There's a lot of activity there. But there are few elements which are standing strong for us. One, we have actually a large developer base. And today, if you look at the big set of development which is happening there, one of the fastest companies in AI are working on the software development side, be it in code generation, testing, and so on and so forth. That is something we can do a fair bit of testing here. We can actually develop that. Second is, we actually have now very scaled, large, new age companies. So at the scale at which a Zepto or a Blinkit or a Zomato operates is globally one of the largest. And they are tech first. And so therefore, anybody who's building an AI company actually finds a large customer base in India where they can work with the latest age consumer clients and be able to test them. That was not possible in SaaS business. You had to go and test it on the US. That's a big one. We have a services DNA, and I'll come to that. And then, of course, now with the SaaS companies done it over the last 10, 15 years, we have a very mature Indo-US corridor. We have people on both sides. So the things like GTM motion are not something you need to figure out a priori. You can do more. And therefore, if I look at the right-hand side, what are the opportunities? There's clearly opportunity in vertical AI. As I talked about, I think we are doing some work right now in financial services and retail and so on. I think the proclivity to actually use is very high as long as you have measured, good, reliable solution. The second is services plus AI. Now, that's a very interesting one. Today, if you look at the CIOs, they were dealing with 600, 700 SaaS companies, and they went through a phase in 2022-23 where they kind of whittled that down to bring down number of SaaS players. They're facing the same issue on AI. Right now, every week, they're finding 4 pitches at the bare minimum. So the amount of confusion which is there, what is agentic, who is offering that? Almost every company has offered agentic now, right? Whether they're good, bad, ugly, we don't know. So therefore, there is a potential of having a service layer which says, look, I can figure this out for you. I can help you get to an end-to-end outcome. And this is what, I explicitly commit to an outcome. I think given our services DNA, which we have built over years, I think that could be an interesting play for people to think about as to how you kind of crack that. And then finally, we talked about this whole developer ecosystem. I think the infra and the middleware potentially is a very big space. It's almost $1 trillion in its own right. I think we can build solutions there. Net, what does it mean? I think we have talked about, I didn't talk about the headwinds and all because we have been in the funding freeze for the last 2 years. It is easing out, but still there is a very high degree of focus on profitability. If you're late stage, you're getting to a market, you have to be profitable. You're early stage, you need to show a path to profitability. I think that's very clear. So that dictum, whatever you call it, pretty much remains. And it's going back to Dhanda first. I think you need to build a Dhanda. I think that's the harsh reality, that's the good reality. But there are massive white spaces, huge opportunities, domestically, globally. I think it's upon us to kind of take them on and build them. AI, whether you're building an AI company or not, you need to really put it in the centerpiece of who you are, because your cost structures will fundamentally change. And so your competitor cost structure will change. So you need to kind of think about that more proactively, because fundamentally your landscape around it will change. That's all I had. Thank you.
Mr. Sinha, I request you, sir, please do stay on stage for a few moments longer. And I would like to call on Mr. Vinod Kenny, Board TiE Mumbai, to present Mr. Sinha with a token of appreciation. Sir, if you'd like to take center stage. Ladies and gentlemen, a round of applause, please, to welcome Mr. Kenny to the stage. Thank you once again, Mr. Sinha, for that very enlightening and thought-provoking presentation. Ladies and gentlemen, please put your hands together. Let's give Mr. Shaleen Sinha another round of applause. Thank you, Mr. Sinha, and thank you, Mr. Kenny.